Welcome back to Investing in Trading Live, sponsored by Online Trading Academy. As always, my name is Josh Lilquist. In the last segment, we talked about a different kind of a market update on what's happening in the markets, Fed announcement. Obviously, we have earnings reports coming this week, last week, and upcoming here this next week as well. And some different opportunities we can use with these financial markets. And we had a lot of people texting in for this investing class. And if you did miss seats for our investing class that we do here at the Academy during the week, we have these on the weekends as well in the evenings. So just text the word investing to the number 210 for 2 seats for this class. If you do miss part of the show, make sure to subscribe to the podcast on Apple Podcasts, iHeartRadio, and Spotify, and give us a star rating if you get a chance. So check that out on wherever you listen to podcasts, Investing in Trading Live. Now today, in this segment here, I want to get into another insight on the financial markets. Al's going to cover what his thoughts are on the markets. Obviously, we talked a little bit about earnings. The Fed raised interest rates from 5.25 to 5.5. And there's some insight that I got from one of our instructors I want to talk about a little bit later. But Al, you've been seeing a lot of these different market moves. I mean, you've seen pretty much a lot of market volatility over the years for how long you've been in the markets. And with this last Fed announcement, raising rates again to another 0.25%, I didn't see what the report was afterward, what Powell was talking about. I'm sure you did. What's your insight on that announcement and what could potentially happen moving forward, coupled with earnings this week?
Well, they did raise a 0.25 point. We knew that was going to happen. That was pretty well a foregone conclusion. And really what was important is what Powell said after that. And he didn't say that they weren't going to raise rates again. He didn't say they were. He just basically left it kind of as a coin flip. What they're going to be looking at is data. As he has said before, their decision will be data dependent. But the market and the investors out there chose to believe that this was the last rate increase. That's why the market just took a rocket ride on Thursday. And we had some good earnings. And as I've said before, what's going to happen with some of these companies that have high valuations, their earnings are going to have a huge impact on what happens to them. If they miss earnings and they're highly valued or overvalued, they're going to take a big ride down.
Are you talking about these big ones like Apple and
NVIDIA,
those companies?
And Meta, look at Meta and Google and these companies that have had really good earnings reports have been rewarded. Microsoft, the opposite happened. They got, as I call it, spanked when they came out.
Same thing with Netflix.
Right. So, and we're still in earnings season, so there's going to be a lot of ups and downs, a lot of volatility on Friday. Now, we're recording the show on Thursday, so Friday the PCE, the personal consumption expenditure, comes out. That really is what the Fed relies on more than anything to determine what they're going to do.
And that comes out at 8:30 a.m. our time.
Yeah, but what Powell did say is that they no longer are convinced that there's going to be a recession. They're looking more at a soft landing. That's what I think sparked the market on Thursday.
And just to explain what the PCE is, it's the change in price of goods and services purchased by consumers, excluding food and energy.
Yeah, exactly. It's a more accurate description of what's happening as far as inflation
is concerned. And the forecast is for it to go down.
Yeah. Which will probably also have a positive impact on the market on Friday. But here's the thing that I'm seeing, Josh. Earlier in the year, if you go back and you look at the pundits out there, the people, the analysts for these big companies, for J.P. Morgan, Bank of America, Goldman Sachs, they were predicting very strongly that we would be going into a recession this year, that inflation would continue to rise. They were saying we could be looking at maybe 10 to 20% drawdown in the markets. And what's happened? Exactly the opposite. I've had a couple of people just over the last few weeks say, you know what? I'm done listening to those people. I made a decision to not do something because they told me the market was going to not do well.
I'm glad you're bringing that up because that's what a lot of people do in their financial decisions. And I know we'll talk a little bit about how to use price charts so you can make your own decisions.
Right. Well, and the reason I brought that up is that you shouldn't be listening to these people. What they're doing is they're predicting that something is going to happen. What's a prediction? It's basically your opinion on what will happen. But that's why we always emphasize, and this is how we teach our students, but we emphasize the fact that you don't look at this what I call fluff, all the extraneous things out there that are people's opinions, and make decisions on that. The market's going to tell you what to do. The market gives us clues as to what's going to happen. If you know how to read those, you can look at a chart. It doesn't make any difference what the pundits are saying. It doesn't make any difference what's happening in the economy. There is a story there on a price chart that's going to let you know whether this is a good investment and the proper entry point to get into something. And people have a tendency, Josh, to overcomplicate things. That's seems to be human nature. Mm-hmm. And if things could be simplified, it's almost like they're thinking there's something must be wrong here. This is too simple. But let's look at it. The important thing isn't whether you're right or wrong. The important thing is how much you make when you're right and how much you lose when you're wrong.
Yeah, and that goes back into the plan that I was talking about in the first segment.
Sure.
How to create that strategy.
Right. Just keep it simple. And the fact is that when you see price move, which is what you want to see, if you invest in something, if you buy something, you want the price to go up so you can profit from it. Why does price go up? When is it going to go up? Who causes it to go up? That's what we teach our students, because we can identify that on a price chart, so you can have a position put in that does three things. It gives you the lowest risk entry with the highest profit potential and the highest probability of it working in your favor.
Yep.
And it's the probability. It's not predictions, it's probabilities that really make a difference.
I like how you brought that up, because it kind of circled back to what the actual facts and the probabilities, that's where your investing decisions, that's where you make those decisions, is having those odds and probabilities, so that way you're not guessing anymore. And as I mentioned in that first segment, we have investing classes to go through this and show you how that actually works. We've been seeing a lot of great people come to these classes, and different techniques and strategies on what they want to learn. And that's why we do these physical in our center here, because if you have questions, bring those questions in. We can answer those questions, whether it's in your income accounts or your retirement accounts. So to come on one of these classes and understand how to place those odds in your favor, text the word investing to the number 210 for 2 seats right here at the Academy. Text investing to the number 210 for 2 seats. I'm going to give something a little bit different away here today, Al. Today I'm going to give away the jumbo pack. There's some different techniques and strategies.
We haven't done that for a while. That's a great deal.
Yeah, when you text in, we'll probably give you a call as well and make sure that you got the date that made the most sense for you. But make sure when we call you to ask for the jumbo pack, and we'll make sure we get you that when you attend. So you brought up something. By the way, you've changed a couple of your words, Al. You mentioned the talking head or the pundits. Normally you call it them talking heads, so I was kind of wondering what the heck you were talking about here today.
Same thing.
But you said that they have opinions and they're predicting different things, and some people are making decisions based off of that. A good example is Al. It's going to snow this year. It's probably going to snow, but when will it snow? Yeah. And when it gets a little bit closer...
Are you sure it's going to snow?
I'm pretty sure it's going to snow. At one point this year, it will snow. But that's my opinion. But when will it snow? That's a whole different story. And that's why when Al kind of ended his explanation, you place your decisions and then you put your odds in your favor. So now I could put odds in my favor. It's going to become winter. It's going to get colder. It will no longer rain. The precipitation will be snow. So there's different odds I can put in my favor by saying, when will it do that? And someone that came long before me once said, it's not all about the news, it's the clues. And where you get those clues is a price chart. So real quickly, just explain how that happens on a price chart. So there's candlesticks on a price chart. I know you explain that in these investing classes. We'll be able to show people when they come into these investing classes. But how does that actually work when you have a price chart? What are you actually looking for? And then how do you make that decision without emotion?
Okay, there's a couple of good questions there. And that emotion thing, by the way, that's one of the most important things you have to control. Most people, when they're making decisions based on opinions, make a trade based on their emotions. It's the emotional reaction to what they think should happen or will happen.
Which is that fear and greed that I talked about in the first segment.
You talk about a plan. A plan is one of the only ways that you can control those emotions. You need to follow a step-by-step, rules-based process that takes, no offense, but it takes your thinking, your brain, as much as possible out of the equation. just follow something that has been proven to work over time, put together by people that have been successful in these markets. But getting back to the price chart, the great thing for us is that a price chart is very similar to an X-ray. If you get an X-ray, you are not responsible for reading the X-ray because you don't know how. You can't look at an X-ray and know what's there. Same thing is true at a price chart. If you don't know how to read it, you don't know what's there. But there are very strong clues that put the odds in our favor of identifying an area where price is going to make a move, either up or down. And by the way, you don't have to just be in the market in one direction. The market doesn't just go up. It goes up, it goes down. These big moves we're seeing now, these up moves, at some point in time, the market's going to be overbought. Individual assets will be overbought. People will be taking profits. Prices will come down. There's always going to be a best point at which to get into something and a best point at which to get out of it. We can see that on a price chart. And really all we're doing is we're looking for, it's almost like a text message from Goldman Sachs or J.P. Morgan or Warren Buffett saying, this is what I'm doing. I'm buying at this level.
And that's
I'm
how it was
selling
back
at this
in the
level.
floor of the exchanges. People could see those people. Now that it's all electronic, that's what we want to identify.
Well, absolutely. And on the floor of the exchange, one of our instructors worked on the Chicago Board of Options, trading options on the floor every day. And what he said is that everybody would look at one person. There was one guy who was so accurate that everybody would look at him. When he started to buy, everybody jumped in and bought. When he was selling, everybody jumped in and sold.
Even on the CME, the bond pit, the 30-year bond, there was a guy by the name of, his last name was Baldwin, Jerry Baldwin, I think it was. And they had a signal when he was buying and selling that they were saying, okay, Baldwin is buying and selling.
Yeah, right. So how would you like to be able to know when something like that was happening, when that activity was taking place? Because that's what drives price. If Josh bought something and I bought something, we both bought the same thing. In fact, if we took 100 of our students and we all bought the same thing, you would not be able to detect that on a price chart. But when these big players, what we call the smart money, the elephants, the Wall Street
Are you saying
pros,
that I don't have billions and billions of dollars?
I'm not 100% sure, but I'm quite sure.
Okay.
Okay. But congratulations if you do, and I'll just start watching everything that you do. But Warren Buffett does, hedge funds do, and they will put sometimes billions of dollars into one position, but the way they have to trade. And if you come into these classes that Josh is talking about, we'll show you how we use the way they have to trade, they have to invest in our favor. It's a huge disadvantage to them, a huge advantage to us. So come into the classes and we'll show you that. We'll show you how we can identify where these big players are making their moves, because that is what is going to move the price of something.
Yeah, and I want to give an example or paint a picture. Al gave a great point about the X-ray. So when somebody goes into the doctor, they have an opinion on what is wrong with them. They say, oh, I have a broken arm or a broken leg, or maybe it's sprained. So that's the opinion. It may look that way, it may appear that way, but you just don't know. And that's where when you have, in this case, it would be a doctor or a radiologist, whoever comes in there, and then they take the X-ray, they read that. And that's what we do on the price chart. We read the price chart, and it's kind of like a story, and it's telling you what's happening and what could happen in the future. And then when you have a strategy, that's where you place the odds and probabilities in your favor. So it's not about an opinion, it's about knowing what to look for, which is those clues in the financial markets. So we have these investing classes, as we've been talking about, to show you how that actually works, to give you examples, to be able to show you that price chart, explain what the price chart really means, because it's just a story. And everybody remembers, well, most people probably might not remember when they were learning how to read, but once you learn how to read, you read some letters. That's the candlesticks. Then you put a group of candlesticks together. That's some words, and then a whole bunch of candlesticks together. Now that's a sentence and in a paragraph. That's the same thing that we do in the financial markets, and then you put the odds in your favor. So text the word investing to the number 210 right now for 2 seats for this investing class and the jumbo pack, which is going to have some different techniques and concepts on what that we're talking about here today. You'll receive that when you attend. Text investing to the number 210 right now for an investing class. Al, coming up next, I want to cover some retirement strategies and how those odds happen. We'll be right back.